Hello traders, welcome back to the channel. This is ShocksCapital FX. If you are new here, consider subscribing, liking the content, sharing with other traders. Turn on your post notifications so that you don't miss a video from this channel. So guys, today we're going to be talking about a famous pattern among traders, the M pattern, the W pattern. We're going to be talking about this famous pattern. We're going to be looking at how do we identify this pattern, how do we trade this pattern, how do we profit from this particular pattern, and what it means in terms of institutional order flow, in terms of institutional trading, the types of M's and their meanings. So today we're going to be looking at 3 types of M's and 3 types of W's. So here I'm going to be showing you the M's. On these patterns, we are going to be talking about the M pattern, the one which I call a regular M pattern, which has equal legs of the pattern at the same level. Then we are having this one where we are having the first leg lower than the second leg, then the last pattern which is the second leg lower than the first leg. So to start off with it, I just need you guys to understand that the patterns, you need to understand where the M's and the M patterns present. Which area are we supposed to be looking at for the M's to present? Because before you can identify and trade the M's, you have to project, you have to anticipate the M pattern happening at a particular zone, at a particular area on your screens, on your charts. So here we're going to be explaining what we need to see before an M pattern presents. So this also means that we are not going to be taking every pattern, every M pattern that presents on our charts. We are not going to be taking any M's. We are going to be taking specific M's according to what I'm going to be explaining here. So number 1, we need to see these patterns occurring, number 1, at the EMAs. This is the area number 1. Number 2, you guessed it right, order blocks. And number 3, breakers. Number 4, we can be looking to find these patterns at psychological areas. Number 3, we can be finding these at quarter points. Number 4, we can be having these M patterns at major highs or major lows on our chart. So these are the only areas which I'm going to be talking about, which you are also going to be looking at to find your M's and W's. You are not just going to trade any M or any W that presents on a chart. You are going to be trading specific M's and specific W's depending on where they appear on your chart. So with that being said, let's go and explain what it means when you see this type of an M, this type of an M, or this type of an M. So starting with this one, this first one, the regular M. When this one presents, it just means we are failing to form a higher high, right? We are failing to form a higher high, which means this can be likened to what I call shift in market structure in my other videos on this same channel. So what it means is we are coming from this point of view where we are having price moving high and price failing to form another high to confirm a continuation of an uptrend. So this now means that an uptrend, this is a halt of an uptrend. But before we see this leg respecting this order block, we have to see some kind of a break in market structure in this area. With that being said, let's go to charts and let's see examples of this regular M. Then we'll come back and talk about this M. Right, so this is the type of an M. So as you can see from this chart, this yellow box, this big one, is the order block from the higher time frame chart, and this one is the M. We are going to be explaining how it occurred and what it means in terms of institutional order flow. Right, number 1, we are seeing this consolidation of price, then this expansion high, this expansion low to the order block. Then after this, we see the break of a swing high. After this break, we see price coming back to this order block that's responsible for this break of market structure. So after this now becomes our first leg. After the break of this and the formation of the apex, price comes back to retest the order block down here. So after the retest of this white order block, we enter after the confirmation with the blue candle right here. That's where we are entering our buy, and our stop loss goes below the white box. So this is an M pattern which is irregular and relatively equal legs. So this is number one, right? So we go to pattern number 2, where we are having the first leg lower than the second leg. So this is a phenomenon we see where we are having an order block on top here, then we are having price engineering liquidity here, where we are having price going towards the OB and not retesting it, just leaving a space. That's our first leg, not retesting, maybe missing the order block with something like 20 pips and below, then coming back, breaking a structure in this area, then going back, taking the liquidity which it would have engineered on top of this first leg to retest the order block and finally go down. So with this type of an M, we are saying we are first engineering money with this first leg, then after that we are going down and coming back, taking this money, retesting the OB and going down. So normally we will see some kind of a candlestick pattern in this area, where we can be seeing some kind of a railroad track or a morning star or an evening star, depending on which pattern you are seeing. Then we have this pattern where we are having a breaker. So what happens is we are having an order block up here, then we are having price coming to the order block or going towards the order block, retesting the order block, then breaking some order block in this area, which now becomes a breaker, then coming and retesting the breaker, thereby forming a second leg lower than the first leg. So this type of an M formation is an M formation which is a result of what we call last step broken. So this order block being the last step and price breaking it and now coming and retesting it. So this will be your entry. Your stop loss goes above the structure and you are going like that. Let's go to charts and see the examples of these last two examples. So with this, let's first look at this. This is a regular M, but first you see that we are having a kind of an upward market structure, breaking the highs as you go up. But at this particular instance, we did not break this high when this chart we have taken liquidity in this area, breaking breaking structure. We're breaking structure here, retested this flip zone and going back and failed to take out this high. After this failure, we see a pin confirmation of this M pattern. So this will be your entry, this will be your stop loss, and you will be targeting this will be right down here. So this will be your entry. So let's look at this. So at this one, with this one, we are having the blue tracer down here. This is the blue tracer, which means we're having yesterday's low. So with yesterday's low and an M formation, we have a very powerful confluence of events there, and we are looking at a very powerful trade if the events allow. So what we are having here, we're having a downtrend going down. So this is the high which we are leaving as we go down, and this is the order block which is supposed to be retested for the downtrend to continue. But now you see we are breaking this order block, now becomes a breaker, and we're breaking this high, now becomes a break of structure, BMS, break of market structure. After that, we are having this engulf here, we're having this engulf, and we're having price coming back to the breaker, to the order block, and to retest those two, and to retest the breaker and the order block, then go up like that. So this is what we are saying. This first leg and this second leg, this is a type of an M which we are saying is a resultant of a breaker pattern or a breaker kind of structure. So these are the only patterns which you need to be taking in the forex market, and you need to understand the story behind every pattern. So guys, thank you for watching. This was all about the M pattern. Know where they occur, know how to trade them, know what they mean. Thank you.